The November rally pauses on Wall Street. The Dow ends a 4-session gaining streak while the Nasdaq and S&P 500 gain. Indices remain on track to post weekly gains. Stocks in the Asia-Pacific come under pressure as the rally on Wall Street eases. The gift Nifty is also implying a lower start for the Indian market. Crude prices crack about 5%. Brent hits $77 a barrel, the lowest level since July as supply continues to outpace demand, and data suggests that demand could also be slowing from the Chinese economy. MCX gold hits an all-time high of 61,914 rupees even as global prices remain flat. Some brokers say this is unusual price activity, complain of issues placing orders on the exchange. The RBI tightens loan provisioning norms for banks and NBFCs to check the rapid surge in unsecured retail loans, raises risk weightage from 100% to 125%. Sources say the decision will slow down credit growth. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Friday morning. We have a lot of news to talk about as well. So let's get going and talk about what's happening in the Asian markets. Well, there is some pause to the Wall Street rally, and that is something which is reflecting in the Asian markets as well. Hang Seng is down 1.5%. There's been a big fall, and it is led by Alibaba shares that have dropped 8%. Asian markets are mostly lower, barring something like a Taiwanese index, which is in the green, which is up 0.3% as we speak. But apart from that, if we look at something like a Kospi down 0.8%, Straits Times is down 0.6%. So across the board, there is some profit taking that has come in for the Asian markets. The gift Nifty, that will also come up for you on the screen, and that one is implying that the implied open is in the red right now, 20 points lower here. Now remember, we did fall sharply in last half hour of trade yesterday, and today as well, it looks like there could be some more profit booking for our own markets. Well, that's all about the Asian markets and what's happening there. But in the US markets, Wall Street ended Thursday's trading session mixed, with the Dow Jones down about 45 points, snapping a 4-day winning streak. The S&P 500 up 5 and the Nasdaq Composite closing with gains of about 9 points. Shares of General Motors slipped over 2% after the union workers ratified a record deal with the United Auto Workers. Shares of mega US retailer Walmart slumped over 8% after the company posted better than expected third-quarter earnings but struck a cautious tone with its outlook. Moving on, CNBC's Steve Leisman spoke to Cleveland Fed President Loretta Mester on the inflation trajectory in the United States and the future path for Fed policy. Listen into excerpts from that conversation.
Well, the market's going to react to data. They're reading the data prints the way we are. But of course, I think our job is really to take the panoply of data out there. We're not going to react to one data release. We're going to look at all the data that's come in. And given where inflation was, we're going to need to be really convinced that inflation is on that timely path back to 2%. And I certainly would need to see more of continued progress the way we've seen to be convinced that we're on that path.
Okay, with that, we'll also get you some more important opinion coming in from market experts on the outlook for equities and bonds for the rest of the year.
I would tell you that U.S. yields are still great competition for stocks, but global yields are terrible competition for stocks. And this whole period where we've had this outperformance of the economy and underperformance of financial markets, this year and a half of hangover, I think we're going to shake it off. And honestly, as we see employment slow down, inflation slow, the Federal Reserve is very likely to become a little more protective of the expansion that we have, and along with this rise in profits that we're seeing. And again, we can talk about downward guidance, but we've raised our estimates for this year's profits and the levels for the next 2 years. So this combination is more attractive for financial markets generally, and even as we see some slowing in the economy coming.
It should hopefully be the start of some more stability into the year end, whether it's for stocks or bonds. What we're seeing right now is that moderate news is good news. When we had too good of news throughout the fall, that was actually pushing yields up and pushing stocks down. If we, on the other hand, start to see a dramatic slowdown, things like a negative jobs report, not what we see in the immediate future, that would hurt stocks and bonds as well. So right now in the Goldilocks scenario, where we're kind of right down the middle and more moderate news, that's really supported the market and could support the market into year end.
Okay, that is some expert opinion coming in. And on the sidelines of the Morgan Stanley Asia Pacific Conference, Mike Wilson, the Chief Investment Officer and Chief U.S. Equity Strategist of Morgan Stanley, spoke to CNBC on the outlook for the U.S. market and more. Listen in.
It's been a tricky year, I think, but the best thing I can say about this year is that the dispersion, at least in the U.S. market, has really increased, meaning the stock picking opportunity set has actually been quite good. Large cap quality stocks have performed exceptionally well. Meanwhile, on the other side, we have what I call lower quality, maybe leveraged balance sheets, smaller cap companies have not performed well because they're mired in what I would call what we thought would happen is an earnings recession. And so what you have is a real bifurcation of kind of the haves and the have-nots. But that's not a bad stock picking environment. It's been challenging, I would say, for a lot of investors to kind of get every wiggle right on the macro side. And look, that's not a bad environment for investing if you're a fundamentally driven portfolio manager. And one thing I will tell you is that while we think it's a flat year from start to finish, it's not going to be flat throughout the year. We're going to have drawdowns. We'll probably have some rallies back and forth. It's going to be kind of more of the same what we've seen. And this all hinges still on the economic outcome, right? So like our economic forecast is still no recession next year, but it's not an exciting economic outlook, meaning we're forecasting below kind of potential GDP, and also inflation's coming down. That's going to continue to weigh on revenue growth. So look, it's not a disastrous scenario by any stretch. It's also not like, okay, it's time to load up everything and there's going to be this huge acceleration in growth and everything's going to work collectively like it did coming out of the pandemic. It's going to be more of the same, stock picking, bottoms up driven.
All right, that's the global market action. But how will overnight cues impact our own markets? We have a research team joining in this Friday morning to tell us what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, tell me all about the market cues. Looks like it could be a down day.
Well, you're absolutely right. A very mixed handover, like you mentioned earlier today. The good part is, when you're talking about crude oil prices, yesterday saw quite a significant correction. So almost a 5% correction as far as crude oil prices are concerned. Brent futures now hovering around the $77 a barrel mark. Yesterday, Indian markets, while, the start was very good, you did see a gap up opening. And, almost through the trading session, this kind of gains actually did sustain. In the last hour, however, the story was very different. Last hour, there was quite a bit of significant selling. In fact, the Bank Nifty closed in the red despite staying, despite markets actually being in the green throughout the day. Now, the other part of the story, of course, remains the mid and small cap index. Yesterday, both the mid as well as small cap index hit record highs. So that performance, or that pocket of outperformance continues as far as the entire overall breadth of the market is concerned. Now, when you're talking about yesterday's trading session, IT pack, that was the one that clearly outperformed. In fact, even within ITs, the mid-cap IT, we spoke about this day first day as well. Even yesterday, that was the story. Now, talking about the key event to watch, all eyes and all action will be dominated on, as far as banks and NBFCs are concerned after the RBI circular. Asian markets as well as GIFT Nifty indicating a muted start for our own markets today.
Okay, all right. That is about the market setup, but a lot of stocks that will be on our radar. Abhishek is joining us now.
Well, to begin with, RBI has increased the risk weight assets for lenders. That requirement has been increased in unsecured lending like credit card, personal loans, and also, towards bank loans to NBFCs. So keep in focus SBI card, it will need higher capital for growth ahead, and NBFCs with unsecured lending and high proportion of, bank borrowings for them. JSW Infra, they have received letter of award to develop Kenny Port in Karnataka. The quantum is about 4,119 crores. TVS Motors, they have a strategic partnership with EMIL Frey for key European markets distribution of partnership that is being done for the market in Europe. DCX System board meeting will be held on November 16th. That is for raising of funds aggregating up to rupees 500 crore. JSW Steel company, upon considering a demand and supply scenario of iron ore in India, has withdrawn its application for the final mine closure plan that was submitted on 1st of September 2023 in the district of Odisha. SJVN, they have signed PPA for 200 megawatt wind project with SECI at a tariff of rupees 3.24 per unit. Now, SECI is Solar Energy Corporation of India. Sources to Money Control, SoftBank is planning to sell stake worth 150 million in delivery via block deal. Now, SoftBank may sell about 4% stake if block deal fructifies. Brigade Enterprise to develop 2 million square feet with a gross development value of about 2,100 crore in the area of Yelahanka, that is there in Bangalore. Back to you.
All right, those are all the stocks on our radar. Let me go across to Nigel, joining in with all the cues from the FNO space. Hey, Nigel, morning.
Well, morning. Yesterday it appeared that we were set for a good finish, but towards the end of trade, the Nifty bank, well, that came off the high point of the day, and that's what put some pressure. But one observation was the Nifty ended higher, but you had the India VIX as well that moved up. Yes, it's moving up from bombed out levels, but that's normally a cautious sign, and that's precisely, what happened yesterday. Now, in terms of the Nifty bank, well, we were highlighting this yesterday numerous times, all through the day, that the Nifty bank is approaching this 50 and 100 DMA. And if you look at the graph, as it hits that level, the resistance level of around 44,250 to around 44,500, we do see a bit of a pullback. And that's what happened yesterday as well. We went to that level, we couldn't sustain. But the shorts, well, they have been covering out big time. And at the start of this series, I recall mentioning that, don't be so worried if the FIs are very, very aggressively net short. Because if they get caught on the wrong side, well, they're going to be forced to cover out. And we're going to see a big bounce. And for the month of, for the series of November so far, we're up 900 points. And the FIs were aggressively net short, and gradually they've been covering those positions, as that chart tells you. In the last two sessions, what stood out for me is the net institutional buy number. That's the DI and the FI, you put it together. They're both more than 1,400 crores per day. That compares with a negative number of around 160 crores on an average for this series so far. So the institutions are showing us the money, which is helping the Nifty itself. On the index options side, well, I'm looking at the 19,700 put, because that has a fair bit of open interest built up. And that's the important mark. Premium out there came down from around 100 to around 60 rupees odd. But there was a sense that there was writing out there, which brings us to the levels. Since there was writing at 19,700 put, well, your near-term support comes in at 19,625. I say this because I've just taken an average of what the rough rate, it could be around 75 rupees odd. Yesterday's high, that becomes a bit of a resistance out there. And the Nifty bank, important levels to track will be the 50 and 100 DMA. The level comes up for you on the screen, that's the resistance zone. And the 20 DMA, that's the first level that you're looking at. You wanted to trade above the 20 and 200 DMA. So the 20 DMA becomes a first reference point. Back to you.
Okay, all right. Thank you so much for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, Reserve Bank has tightened loan provisioning norms for banks and NBFCs to check the rapid surge in unsecured retail loans. We'll explain all that to you when we come back. Stay tuned. Welcome back. Well, let's talk about the big story that we got last night. The Reserve Bank has tightened rules for consumer lending, asking banks and NBFCs to set aside higher buffers and put in place board-approved policies to monitor exposure limit to this segment. This comes after the RBI governor flagged concerns on the high rate of growth of consumer loans on multiple occasions, asking lenders to remain cautious. Ritu Singh joins in with the highlights of these rules and what do they really mean. Ritu.
There have been repeated warnings from RBI on the very high growth rate in consumer lending, especially unsecured consumer lending. And finally, you now have the regulator taking action. RBI has increased the risk weights for consumer loans by 25 percentage points to 125% for both banks and NBFCs for all outstanding and new credit exposures. However, housing, education, vehicle and gold-backed loans are excluded. Microfinance SHD loans are also excluded from higher risk weights, specifically for NBFCs. Similarly, the risk weight for credit card receivables has also now been raised. Now, while all of this is not exactly a surprise, what was unexpected was the higher risk weight for bank lending to NBFCs, where RBI says that in cases where the current risk weight as per external ratings of NBFCs is under 100%, the risk weight is going to be increased by 25 percentage points. In addition, RBI has also asked banks and NBFCs to review their policies in terms of exposure limits for these and put in place board-approved limits, especially for unsecured consumer lending. It has also said top-up loans against movable assets which are depreciating in nature, like vehicle loans, will also have to be treated as unsecured. Now, in terms of the impact, number one, this is going to hit the NBFCs. The loans they get from banks will get tougher to get. Number two, higher capital requirements for lenders will eventually translate into higher lending rates for borrowers as well. 3, the business could slow down in this segment for banks and especially NBFCs as they adjust to these higher capital requirements. And 4, higher lending rates by banks to NBFCs could also spill over to corporate bonds by way of higher yields and widening of credit spreads for non-banks. Now, credit growth in unsecured lending has been an outlier, growing at 25-30% kind of rates compared to the average of 12-15% growth of credit overall in the country. And that's caused some concerns, which is why now you're seeing RBI step up and put guardrails in place.
Okay, Ritu, thank you so much for explaining that to us. In fact, here's the RBI governor speaking last month after the monetary policy on the rise in unsecured credit.
Certain components of personal loans are, however, recording very high growth. These are being closely monitored by the Reserve Bank for any signs of incipient stress. Banks and NBFCs would be well advised to strengthen their internal surveillance mechanisms, address the buildup of risks, if any, and institute suitable safeguards in their own interest. The Reserve Bank is closely monitoring the evolving situation and will act proactively to maintain financial stability.
Okay, all right, that's all about consumer credit rules. Let's move on to another important story in the commodity space. Gold on MCX hit an all-time high yesterday in what some brokers are saying is an unusual activity despite global prices trading flat. My colleague Manisha is joining us on the phone line with all the details and explaining what really happened here. Manisha, good morning.
Hi, morning, Sonal. Well, absolutely. You know, while we did see the gold prices in the global markets gain, but not as much as the Indian markets reacted. We saw all-time high of 61,914 rupees per 10 grams. But the funny thing is that the prices surged by 3% only for a couple of minutes. At 9:10, we saw this price, and by 9:12, you had the prices trading back below 60,800. So it was an 1,100 rupees per movement happen in just a couple of minutes. Now, the thing is that traders do find this move as an aberration. They have been complaining of issues with placing orders since yesterday afternoon on the exchange, and this would have definitely triggered stop losses for some as well because the price moves were just too quick. The other thing is the volumes, which were also high during these trades. Well, I have reached out to the exchange last night itself, and we are still waiting to hear back from them. But clearly, whatever move that you saw or the all-time high that we saw in the gold prices only stayed for less than a minute, and then the prices were back below 60,800. So it was 1,100 to 1,200 of a move that happened within a couple of minutes.
Okay, that's a sharp up move. Thank you, Manisha, for bringing us all those details. But we can't let you go. Tell us about the other commodities that you're focusing on today.
Well, I'm looking at the crude oil prices for sure because we've seen 5% of decline overnight for this one. So this is going to be a fourth straight week of decline for crude. We're trading at a 4-month lows onto this one. Well, there are various factors which are weighing onto the prices. The China oil refining has declined. The U.S. inventories have surged by 17 million barrels in last 2 weeks. And the U.S. crude output is at a record highs as well. So there is no chance really that you could be looking at any support for crude oil prices. So we are trading way below $80 a barrel. And that's how this week also could be closing at.
Okay, so the fall in crude continues. Thank you so much, Manisha, for joining us with all those details from the commodity space. We'll slip into another break now, and more news and updates will follow on the other side. So stay tuned for that. Welcome back. And as the conflict in West Asia rages on, Israel has ordered civilians to leave 4 towns in the southern part of the Gaza Strip by dropping leaflets warning them to flee. This has raised fears that its war against Hamas could spread further to areas which were not affected by fighting earlier. The collapse of communication networks has disrupted the flow of aid while negotiations continue over the release of hostages taken by Hamas. The communication blackout comes at a time when hospitals across northern Gaza are in urgent need of fuel, electricity and medical aid. The UN's World Food Programme said that civilians in Gaza were facing starvation, with supplies difficult to come by due to the ongoing war. Okay, moving on to the other big national story, fifth day running, and the ordeal continues for 40 construction workers trapped inside the Uttarkashi tunnel. Rescuers have brought in the state-of-the-art equipment and have begun drilling through the debris. Authorities claim best possible efforts are being made to rescue the 40 workers, and all of them are safe and unharmed. All right, let's get you some more national updates now. The state assembly elections is all set to commence today in Chhattisgarh and Madhya Pradesh. In Madhya Pradesh, all 230 seats will be contested in a single phase, while Chhattisgarh will hold the second phase of its two-phase elections in 70 out of 90 constituencies. The election will see a battle between the ruling Bharatiya Janata Party and the main opposition party, Congress, in both the states. The results for all the 5 states will be declared on December 3. Okay, let's get you some more updates now. This one from the Cricket World Cup. Australia get the better of South Africa to set up a final showdown with India on Sunday. Bowling first, the Australians had South Africa reeling at 24 runs for the loss of 4 wickets. But a resilient David Miller century saw the South Africans put up a total of 212 runs. Chasing, the Australians were reduced to 193 runs for the loss of 7 wickets. But Pat Cummins and Mitchell Starc held their nerve to steer Australia to their 8th 50-over World Cup final. Okay, this is going to be an exciting weekend with India playing against Australia in the finals that we have on Sunday. So, of course, that is something we all are looking forward to this weekend as well. For now, let's quickly take a look at GIFT Nifty. That's implying an open in the red for our own markets. 20-point down tick is what we are suggesting there. So, with that, we'll take your leave on this edition of Power Breakfast. Bazaar Morning Call comes up next.